Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. It's lecture time. This week's topic, guys, is robotic indifference. A lot of you guys are out there trading. You're doing this on Tuesday and that on Wednesday and this on Thursday, and you are just all over the place because you don't have any real consistency, because you're not doing what you're supposed to do when you're supposed to do it. Each day is different to you, and that's not the way you're going to approach the markets. Now, I'm not talking about a little bit of flexibility or malleability in your trading. What I'm talking about is you don't have the consistency, the robotic indifference to let the odds actually work for you. See, you could take a good trade and it could fail. You could take a bad trade and it could work. But over the long run, the consistency, the robotic indifference is what you're looking for. Okay, so today we're going to talk about how to accomplish that. So it's a little bit psychological. And then we're actually going to get into the charts and show you what a good chart looks like so that when you see it, it's like, boom, I'm just going to take it. That robotic indifference is what I'm talking about. When you think about breathing, when you think about walking, guess what? You don't think about those things. You just do them. I'm just talking to you right now. I'm not even thinking about it. It's just happening, right? When you go walk outside, you're not thinking about left, right, left, right. You're just walking. This is the way your trading needs to get, because a lot of you guys are missing opportunities because they're happening quickly and you're not reacting fast enough, or you're not confident enough, and you're sitting there going, oh, should I or shouldn't I, or should I or shouldn't I? A robot doesn't think about it. Criteria are met, boom, I'm in it. Let's do that one more time. Criteria are met, boom, I'm in it. So we're going to talk a little bit about robotic indifference. We're going to talk about the criteria that you need. We're going to talk about charts today. So a little bit of everything today, all right? If you like these videos, please click that like button, hammer that subscribe button. Best channel on YouTube on trading, this one. All right, I'm Jared Wesley of Live Traders. Let's get to it. This week's lecture topic is robotic indifference. Many of you have heard this term or this word before, these two words before, because I've used them before. Robotic indifference is basically becoming a robot. It's like breathing or walking. You don't really think about breathing, you just do it. When you walk, you don't really consciously think about walking, you just do it, right? Robotic indifference is getting your trading to that level, to that point, to where you're so good, you don't hesitate during execution, you just do it. In fact, you have that slide coming up soon, Jordan, unconscious competence, right? You don't think, you just do. And I'm being honest, it doesn't matter your level of experience, there still will be a level of humanness, right, to us. For example, today on Goog, I really looked at it and said, man, I should be taking this, but I didn't. I chose not to take it. I don't know, I was complacent, whatever. And then Aaron came in and said, hey, it met 4 or 5 of my 6 criteria, so I took it. That's where we need to go with this. We need to get to a point where your trading is just automatic, hence robotic, right? Robots don't think. They're programmed to do something. That's it. And when they're programmed to do it, they do it. They don't question it. They just do it. Even in chess, right? Even when you see Big Blue and all these other supercomputers in chess, they analyze millions of moves and they go, this is the most statistical, likeliest, bestest move. Sorry for the terrible English, right? This is the best move I can make right here. Done. That's where we need to get. Okay, that's where we need to get with trading. Say, hey, this is the right move. Why? It met all these criteria on my checklist. So we're going to talk about that today. Next, we're going to also get into some charts and look at what a good chart looks like and why you should be robotic when you see that chart. But before we do any of this, we need to go into when will the insanity stop? I have a new one for you guys this week. It's not very sexy. It's a typical run-of-the-mill, when will the insanity stop? It's just people being stupid. And here it is. I lost over $100,000 to Bed Bath & Beyond. As a higher karma is needed to post on the BBBY subreddit, wasn't able to share this and ask around if anyone's going through the same and how they are dealing with it. Hopefully not walking off a bridge. This is serious, guys. I bring these up to you to show you every week, not to harp on the people that do it. 25% off coupon or 20% off coupon, right? I bring this up not to harp on the people that have done it, but as a reminder of you are one push of the mouse button away from doing something this foolish and being this foolish, right? So don't do it. All right, that's all I'm trying to do is kind of throw cold water on you, slap you silly, and say, look, this business challenges you every single day. You press the button in the wrong way or add a zero that you shouldn't have added it, and boom, there's $1,000 gone. Boom, there's $10,000 gone. Boom, there's $100,000. And some people are in such a position that they're borrowing money to trade, or they use their credit cards at 20%, which is insane, right? And this is where you need to stay focused. You need to have good money management because it's so hard to earn and so easy to lose, okay? So when you think about that, every time you press that button, this goes back to the robotic indifference, make sure you're using that checklist, because if you're doing something without fully understanding it, you're gambling. We're not here to gamble, we're here to systematically make money. Okay, we're here to systematically make money. Okay, all right, let's move on. I'm not going to harp on this. Losing 100 grand sucks, but clearly this person had no idea what they were doing, so in a way they deserved it. Be smart. Be smarter than this person was. Okay, this is the slide Jordan was talking about. Okay, all right. Practice makes perfect, and today's general topic is robotic indifference. So in anything in life, it really doesn't matter what it is. We all start at the same points with regard to unconscious incompetence, right? The trader neither understands or knows how to do something, nor recognizes the deficit or has a desire to address it. Well, the reason they don't have a desire to address it is they don't even recognize it. Do you see where I'm going with this? So some people go, what do you mean? I have a desire to address it. Well, not if you don't know what's happening. Like, you're so lost in space. You're in la la land. You're in space cadet land that you don't even know what's going on, right? It's like you just don't even know what you don't even know, and you don't know that you don't know it. You just don't know a lot of stuff at that point. And this is true for every person on the planet when it comes to something completely and utterly new to them. Right? And we all go through this. You know, it sounds crazy, but there are some cooking courses out there that start with boiling water. Now, I know many of you are like, well, duh, I know how to boil water. Right. But there was a time where you didn't. Yeah, I don't know, until someone showed you, or you watched your mom or your dad or somebody cook, right? So the point, though, is that we all have a level of unconscious incompetence to us. But as we progress, we get to the next stage, which is conscious incompetence. And this is where most traders fall, right? Conscious incompetence. This is kind of where you're like, hey, man, I'm really not very good at this. That's the incompetent part. But the act of saying, I am not very good at this, is the conscious part. Hey, though the trader does not understand or know how to do something, she recognizes the deficit without yet addressing it. So you're kind of between conscious incompetence and conscious competence. This is where most traders are stuck in this purgatory, if you will, because you're starting to become aware that you're incompetent, but you haven't fully addressed it. And then what happens is you become aware of the incompetence, and then you begin to address it. Do you see where I am with that? Because when you talk about conscious competence, this actually implies competence, right? You're not there yet. You see, a lot of traders are stuck between this area, right between conscious incompetence and conscious competence. See, you're conscious of it, but you're not good at it. Conscious competence assumes you're actually okay at it, but it takes a lot of effort for you. You're actually like very deliberate. It's not like walking or breathing. It's like a baby at 1 year old. They can put the left foot in front of the right foot, but they have to think it through very clearly. That's conscious competence. But incompetence is like, you're still not there yet. So most traders are between these two. Does that make sense? They're stuck here. They're conscious of their level of incompetence, and they are trying to address it. Right? Does that make sense? They're conscious of their level of incompetence, and they are addressing it. See, this one says without yet addressing it, but you guys are making the effort. And then as you gain more experience and more practice, you get to the conscious confidence level. The trader understands or knows how to do something. However, demonstrating the skill or knowledge requires a great deal of concentration. This is where you guys are thinking through your checklist. You have a checklist, and you're really thinking it through every step of the way. Does it have a bottoming tail? Is it at minor price support? Is there a rising 21 period moving average there? Is the market in? Like, you're consciously going through that list. And that takes time, and you miss trades because of this. Then you're going to get to the level where you just know. You're like Neo in the Matrix. You just see things. All those numbers that everyone else is looking at and confused by, they make sense to you. You look at a chart and you immediately get it. Nope, I wouldn't do that. Yep, I would do that. Right? That's the level of a professional. It doesn't mean, and I want to be clear about this, it doesn't mean you can't make money in the conscious competence level. You can, and traders do. But this is the level where you're really thinking through every action you take because you don't trust. When you come to the unconscious competence level, that's the level of, I just know. It's inside your brain, it's programmed, and when you see it, you get it. Walking, breathing, maybe driving a car, although most people seem like they're very consciously incompetent driving a car. But anyway, unconscious competence is the goal. It becomes, quote, second nature, okay? And it becomes easy. Dare I use that word, easy? But that's kind of where you're at. You get to the point where you just come in with the expectation to make money. I've said this before to you guys. Great traders expect to make money. Newer traders hope to make money. There's a difference. There's not a day that Anmol doesn't wake up, turn on his trading platform, and fully, 100% expect to make money. It's the rarity where he comes in and doesn't make money. Newer traders go, I hope it's going to be a good day. I hope it's going to be a good day. Does Kobe or Michael Jordan go into a game going, I hope I have a good game tonight? No, they go out there with full, utter, total belief. I'm going to have a good game today. Why? Because I usually do. That's why, right? I like reading a clock. Let's not go too far, Ollie. There's a lot of people that if it's not digital, they can't read it, okay? So anyway, these are the levels that you go through, right? And to help you get to those levels, you need a routine, right? You need a proper mindset and routine. And part of that mindset and routine is consistency, doing the same thing over again. Discipline, doing the same thing over, even on the days you don't want to do it. I'm sure there are days that Aaron says, I don't really want to review PTS today. I could be doing something else with that hour. Maybe I could be picking the kids up from school, or maybe there's something on the farm that needs to get done. But I have to do it because I know if I do it, I'm not only consistently disciplined, I'm also moving myself closer to unconscious competence. So you need to every day wake up with a certain mindset or routine or ritual, right? Anmol calls it his, what's the word that Anmol uses for it? His affirmations or something like that, right? Whatever you want to call it, okay? His anchors, there it is, his anchors. So whatever you want to call it is fine, but you're going to have a systematic approach to every single day. That's what professionals do. Every day, okay? So you're going to develop that market bias in the morning. You're going to scan for gaps with that bias in mind. You're going to rank those gaps as well as areas of interest for those gaps, okay? You're going to develop a plan of action for how to trade those gaps. And then you're going to review the main bullet points of your trading plan to reinforce the good habits and the positive thoughts. So for some of you, this requires more time than others. For some of you, you need to wake up 2 hours before the market opens to get to this. Other people, Unmal's sitting here like 15 minutes before the market opens, yawning, still with those little sleepies in his eyes, going, oh, maybe I should think about putting my list together. But that's because he's gotten so good at this, it require a lot of time for his morning routine. Okay, but other people do. All right? Then you're going to visualize. Once you get through this process, you're going to actually sit and visualize, how's my day going to go? This is how I would like it to go. Now, some of you sit there and go, this stuff is corny and ridiculous, and try it. Really, give it some thought. Where you basically, I don't want to use the word meditate. I mean, you could use that. That's fine. Where you're visualizing how you see the day going, how you see yourself trading Apple or Tesla or whatever stock you're looking at on the gap list, right? Where you see that trend line. Visualize the stock hitting it with that topping tail and that volume spike, and boom, the execution of it, right? Exactly. Be intentional about what you want to happen today, okay? And then you're going to get to a point where you just do it naturally. You're not really like, it's visualization time. No, you're just going to do it naturally. And then after you do all of these things, that's practice time, right? And the reason we practice so hard is so that the game feels easier. And then the game begins, and then that's the watch, wait, and execute when you get the pattern you've been waiting for. Right? And I think, and I use Kobe Bryant a lot because he was a very motivational person, but, I can't remember the exact conversation, but somebody was asking him, like, do you ever get nervous in the game? And he said, no, I don't. And I said, well, why? It's a lot of pressure. He goes, because I've prepared so much. I've prepared so many hours for this moment that I feel I'm ready. And that's what you have to feel like in trading. See, what happens to some of you is you know what you're supposed to be doing, but actually doing it is challenging. You get nervous. What if it doesn't work? What if I'm wrong? And all these negative thoughts come flowing into your head because you're not ready, right? You haven't convinced yourself you're ready. It's that hesitation on a trade. Man, it's meeting all these checklists. I should yeah, but I'm already up $300 today. I don't want to give it back. Yeah, but the market might turn on me. Yeah, but it's 11 o'clock. Look, if it met those criteria, you just do it. Somebody passes you the basketball and you're wide open. You take the damn shot. You don't hesitate and look for your teammate to pass to. You're wide open. You take the shot. You execute when you're supposed to execute. And the practice will make you execute without hesitation. So, you need to be very conscious and careful about how you're practicing. Because if you're not practicing deliberately as if it's, quote, game time, you're doing yourself a disservice. Because when game time happens, you won't be ready. But if you do it deliberately, specifically, you'll know you're ready. You won't even question it. You'll be like, well, that's exactly what I wanted to see. Click. Right? I got exactly what I was asking for. I'm not going to hesitate. Do it. Okay? Then once you execute, just trust the plan. It's out of your control at this point. You just execute the plan. You executed the trade to get in. Now it's time to execute it while you're in it. Then at the end of the day, review everything you did that day and find out, hey, what could I have done a little better today? What did I do well? Give yourself credit for the things you did well. Like, yeah, man, I traded really well today. Could I have been better today? And if so, find where you could have been better. But this isn't all just about tomorrow. Sometimes you need to give yourself a pat on the back and say, good job. You came in, you saw, and you kicked ass. Pat on the back. Don't get, whoops, sorry guys. Too far, like not to the point where you're like gloating like I'm so great, but give yourself that pat on the back so that you feel good about it because you did the right thing when you were supposed to do it. And then you're going to repeat that every single day. Wait for it, even on the days you don't want to. Even on the days where it was challenging to get out of bed. Even on the days where things just didn't go well and you had a bad day and you lost money. You're going to repeat the same steps every day. And then you're going to get into a routine. And that routine's going to get so embedded in your core being, you don't even think, you just do it. It's become part of who you are. It's like for those people that go to the gym, like, like a lot of other people, like, I need that first cup of coffee every day to function. I think that's crazy, but a lot of people have that, right? That's what your routine's going to be. It's going to be so unconsciously competent. You're just going to do it every day because you can't imagine not doing it. You feel weird and strange not doing it. It's like, I don't know, the day you don't practice, you feel strange. Like, why didn't I practice today? You're going to do this routine every single day. And it's going to become part of who you are. And you're going to make fine-tune adjustments and tweaks to it to get to a higher level, right? So the rules are the rules. You do what you're supposed to do, when you're supposed to do it, without question, no matter how hard it is. That's it. There are days you're not going to want to do it, and you're going to do it anyway, because that's what you're supposed to do. And it's going to get you closer to those bigger, larger goals and dreams that you've set for yourself. There will absolutely 100%, there will be days you don't want to do it, and those are the days you need to do it the most. Go ahead, Derek. I'm pretty sure it's in professional trading strategies, but go ahead quickly. I'll give you 5 more seconds. 5, 4, 3, 2, 1. Oh, you like that? Oh, your Freudian slip. Anyway, do what you're supposed to do, when you're supposed to do it, without question. Guys, when you're listening to this lecture, you're motivated to do it. I call it, you've heard me say it before, it's not new. I call it Oprah syndrome. You're listening to Oprah and she makes you feel good about yourself. Great. You listen to Tony Robbins, he makes you feel good about yourself. Great. It's when they're not around, when no one's around, when no one's watching, when no one's listening, that's when the real work is done. When you go to the pool and someone's like, damn, you're in great shape, Derek, Joe, whoever it is, you're in great shape. Look at those 6-packs. Those 6-packs just didn't magically fall out of the sky. You worked for that shit. On the days you didn't want to go to the gym, you went to the gym anyway. On the days you really wanted to eat 17 slices of pizza, you didn't eat any pizza that day. You showed discipline. You worked your ass off, and that's why you look so good. But you did it when no one was looking. That's trading. When no one's watching, which is most of the time, you need to put the work in. The work comes before the money. Okay? Put the work in, even when you don't want to do it. I'm not kidding with you. That's why I'm repeating this like 12 times. There will be times you don't want to do it. Those are the days it's most important to do it. Because then you can do anything. You can accomplish anything. You're a human being, man. You will wake up some days feeling like crap. Oh, it's cold out. Oh, it's raining out. I just don't feel good. I stayed up late. Like, whatever the excuse. You just get the heck out of bed and get to it. Get to it. All right? Now, what to do? I'm going to go through these slides quickly. There's 2 slides here. This is easy money, man. There's your engulfing bar. There's your turnaround engulfing bar. There's your super 3-bar play. There's your entry at 90.35. Your stop's 91.35. You just get to it. Right? Goes down to $86. Okay? That's what you're supposed to do. So when you see it, you just do it. You don't sit there and question it. You go, this is exactly what I wanted to see. I'm going to do it. Now, on the flip side, if your stop loss is right down here or down here, you take it. No, it doesn't feel good getting punched in the mouth. But you do it anyway. You sit there and go, all right, nice shot. Like, in tennis, you ever see somebody just clap the racket? Too good. Too good. I did what I was supposed to do, and the market was just better. Because if you need a reminder, I'll give you one. People do this stuff. I lost over $100,000 at Bed Bath & Beyond. This is not good trading. This is gambling. And remember, you're not a gambler, you're a trader. There's a systematic approach to making money through the use of technical charts and great money management. Okay? You're not ever, 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 ever going to let a stock do this to you. Even when you're trading options and you're giving them 3-to-1 against you at times, against you, you're still getting out at some point. I know you may add back on the way down in certain areas, but you get to a threshold where you're like, that's it, no mas. Okay? Because otherwise, you're going to blow up your account. You're not going to be able to live to fight another day. And then your dream of becoming great at this is over because of 1 or 2 really, really foolish decisions. Don't be that person. That's just foolish. So, let's talk for a minute about knowing the trade. Okay? We talked about expectation a lot, and I want to rehash this because I think you guys aren't there yet. All right? Every trade is different. Aaron used that term today, this afternoon. It's all about expectation. Right? He said, I scalped an R out of Google. I scalped an R out of Apple or whatever it was. It's all about knowing what the expectation is. So when you sit there, you need to ask yourself, what are breakouts and 3-bar plays supposed to do? What, excuse me. What are clean buy setups and uptrends supposed to do? What are 100% retracement double bottom retests supposed to do? What are climactic and parabolics supposed to do? If you don't know, go back through Professional Trading Strategies, PTS, and find out. Because every trade you take has an expectation to it. Every trade. And that expectation isn't just what type of trade it is, it's also the time frame in which it's on, 1 minute versus daily versus monthly. It's also your personality. All these things come together to form the perfect trade. And the perfect trade for you might be a half-hour scalp. It might be a 3-hour all or nothing. They all come together to form what your expectation is for it. And that expectation might be different than somebody else's. Okay? So when you take a look, you ask yourself, well, what is the expectation? What is this pattern supposed to do? When I got in tech today, we got in at 38.50. The expectation was to go to 39. And guess what? It went to 39. The expectation wasn't to set a new high of the day. It's not that type of trade. It's a weak stock that left a bottoming tail on volume bouncing off of an area of support after an extended move into that area. The expectation was not a new high. The expectation was a shallow bounce and then a rollover. That's kind of what it did, right? So ask yourself what the expectation is. So you take a look and you say, okay, here's a stock, gaps up a little, pulls back, moves higher, pulls back. How do 100% double bottom retests usually act? Once you know how they are supposed to trade, supposed to act, only then can you determine if your bar-by-bar analysis is correct, right? So I'm looking at this going 1, 2, 3, 4, 5 bars down. Okay, I see a green bar. So when I look at this, I think to myself, well, gosh, it's 5 bars down. And the last time it entered this area, it left a massive green bar. Not just any old green bar, a massive green bar with a huge bottoming tail. And note, you can see a little bit of support from the previous day. So, previous day, it gapped up today. Pulls back, bottoming tail, little bottoming tail, topping tail, bottoming tail. In support, right here, it ripped. So the next time it retests support, it's probably going to rip. That's just a guess. But past price action helps predict future price movement. Green bar, my expectation is a bounce of some kind. I may have to give it some wiggle room, which you'll notice lately when I've been scalping, I've been giving them lots of wiggle room. Most of the stops you guys are seeing are double what they really should be and could be, right? I used 75 cents on tech when it should have been 50. I just wanted to give it wiggle room. And if it pulls back a little more than my expectation, I'm going to add back. So right now, you're looking at this going, I want to get in above the green bar, but I'm going to give it some wiggle room, right? I'm going to give it some wiggle room. And if it triggers me in right here and starts to pull back down to here, I'm going to add to it down here. Because I gave it some wiggle room, because it really shouldn't break this area. And then it's going to lower my cost average, and then it's going to bounce back up. Right? So the expectation here is a 50% retracement. Let's take a look. What happens? Well, we know these types of patterns often wiggle around, so it was far less concerning watching it chop around before going higher. But what if a 3-bar play did this? Same attitude? The answer is no. The answer is no. And also notice what happened. It peekabooed up and then, if you went too tight, stopped you out. And I said, hey, you need to give it some wiggle room, because that's where this range, this is a buying range, which is why you'll often see Unmall or Cass or Aaron or everyone else, they're bidding for these lower, giving it support or stop loss way down here. And then what happens? Peekaboos, pulls back, goes right up. You might even be out on that bounce. It may be enough of a bounce to get out. Then it retests, and now you're golden. After the retest, now I'm really expecting a bit of a bigger move, because now the buyers have proven they're stronger than I even thought they were. See, I'm not really expecting 100% retracement here. When I see that area, I'm sitting there going, okay, give me 50, 60%. Give me a move back up to there, and I'll be happy with that. May not even be a full R, maybe. If you're looking for a longer term trade, then you're going to get in, give it room, and you're going to try to shoot for that 100% retracement. But no, it might be a long shot. Okay? It might be a long shot. Here, how do 3-bar plays usually act? Wide bar, narrow bar, right? A couple bottoming tails, but you're looking at this area right here around 162, and the expectation is hit and run. That's how 3-bar plays act. Why? Because the stop loss is so small. By definition, out of the textbook, the second bar, bar number 2, has to be in the lower 50% of bar number 1. And the really, really good ones are in the lower 30%. Right? The really good 3-bar plays don't need 50% wiggle room. They're in the lower 30%, because this is a momentum trade. It's a hit and run trade. It's not a wiggle around, chop around trade. So, when this happens, get the F out of Dodge. Do not stay. It's not going to work. So when you see this red bar trigger, you think, okay, fine. And then, boom, a green bar completely engulfs her. That is not a good sign. In fact, when you see this red or this green bar happen and it retests this area, I'd consider buying it here. I would genuinely consider buying this down here at 162 after this bottoming tail. The point simply is, know the expectation. This stock was supposed to hit and run and go lower. They're momentum trades. If they don't move quickly, they usually fail. So, seeing the wide range green engulfing coming in early was a huge warning sign that this trade wasn't going to work. It was. And the fact that it then did not put in a new low and then left a bottoming tail. So, even if, and hear me out for a moment, even if you weren't quick to get out of this at break even, you should have been out at 164, right? Why let it go to 165 all the way up here? You know it's done. You know what a good example of this is today? Do you know what a good example of this is today? Unmall on Amazon. Remember we shorted Amazon today? And I lowered the stop. We got in at 121. The stop was 122. And I lowered the stop to 121.60, something like that. And Unmall said, he was on the mic at the time, and he said, guys, I would lower it to 121.10. Because if it breaks above 121.10, which is the trend line, it's going to break 122. Sure as shit. When it broke above 121.10, it broke 122. Now, thankfully, we had moved our stop to break even by that point, right? We moved our stop to break even by that point. But once it broke that trend line, it ripped higher. Big ass, wide range green bar. Would have stopped us out. Instead, I didn't make much money, $270, which is dog shit. But We didn't lose on it. That's the key, especially when this isn't just about scalping, it's about all trading. But when you're scalping, the key is very small losses. In this case, it was a small win. So read the chart. Know the expectation. When this happens, get out of Dodge, even if it's a half stop. Because if it breaks 164, it's over. Save yourself the dollar. Save it. Don't get into the hope mode, because I know it's what a lot of you do. You literally start drinking the hopium. And you're like, well, maybe it'll still work. Maybe it'll just peekaboo. Maybe, right? Maybe, but the odds are against it. How do high of the day wedge plays usually act? Right? Here's like a little ascending triangle kind of wedge. Bottoming tail, bottoming tail, bottoming tail, right? Buyers and sellers are battling out, and right now it kind of looks like the buyers are winning, right? Kind of looks like the buyers are winning, all right? Bottoming tail, bottoming tail, bottoming tail, break the high day, rip. Let's take a look. Oof, oof. No follow through, get out. It's a momentum play. When this green bar comes in, okay, let me ask you guys this. You know, audience participation. You guys need to step up. This green bar is the trigger bar. Let's call this bar number 1, just for this exercise. This green bar is bar number 1. You tell me what bar you would have been out of this trade on. Would you have exited the trade on bar 1, bar 2, bar 3, bar 4, bar 5, bar 6, stopped out? By bar number 6, you stopped out because the stop was 94. So bar number 6 is full stop. So bar 1 to bar 6, which bar, 1, 2, 3, 4, 5, 6, are you getting out of this trade? Bam! Jordan is correct, and you guys are also correct. No, actually, you're wrong. It's bar 5. The break of the third bar is low. That's it. That's the exact answer I was looking for. That's the exact answer I was looking for. Bar number 1 is green. Bar number 2 is red. Bar number 3 is a bottoming tail. So the break of bar number 3's low is your exit on this trade, which happens to be bar number 5. And very few of you, most of you, put bar number 4. You're getting out on bar number 4. The break of bar number 3, 1, 2, 3, this green bar with the bottom, the break of that low, you are out. And guess what? It's about a half stop. You still lost money on it, but you didn't take a full stop. Once this stock leaves this bottoming tail, you have to give it the benefit of the doubt, right? You have to give it the benefit of the doubt. Bar number 6 is a full stop out. There's no reason you should be sticking around for a full stop out. So if you guys said bar number 6, you're an all or nothing trader. That's fine. That's fine. But if you're reading the chart, bar number 6 is the full stop out, and you really shouldn't be there. The break of bar number 3 is low. That's the answer. It's almost as if Jordan's been through this before, or at least he just pays attention. He's the only one who said it. The break of bar number 3 is low. That's it, right there. You might lose a half of an R, but it's better than losing a full R. Okay? All right. Here, be robotic. It says double top. It's really a triple top, right? Here's a top, pulled back. Here's a top, pulled back. And what do we have? 1, 2, 3, 4, 5, 6, 7, 8, 9 bars up on volume into a double top resistance. My goodness gracious. You could buy the bottom down here on the trend line break for a scalp, and you're going to short the top right up in this area. Okay? So if you take a look at it, this is one of those kind of no-brainers. Wide range ending bar, volume ending volume, okay? Peekaboo topping tail, and now you're like, ooh, let me catch some of that. Doesn't look like much, but it pulled back like $4, $5. Okay? You take a look at this, and all of a sudden, hold on one second, that's the stock, okay? Hold on, I just want to be clear. It's the same stock, okay? Now what are we doing? We're drilling down. Same stock. We're drilling down. You're going to short it up here. 121.55, stop 122.15. You're going to short it again here. I don't know if I'd want to short it right here, but you could lower your stop, lower your stop, lower your stop. Okay? This is only possible because of the 60-minute chart. This 2-minute breakdown short play, far from the moving average, is only possible because of the 60-minute chart. All right? Now, some people, this is a little bit aggressive, and I understand that, but it's a triple top and 9 bars up on volume into that double top. This is a beautiful play. And this isn't just a scalp play. I mean, this thing clearly went from like 120, 150 all the way down to 115, 116. Okay? When you see your criteria being met, check, 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 take it. Check, 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 take it. Be robotic. Stop being, I can't say that word for the PC police these days. Okay? This is what it looks like on the same chart. This is how you match time frames. All right? It's the same thing we just looked at, but I put it on the same slide so you could see it. There's the double top resistance. Okay? If you wanted to wait a little longer for a little more confirmation, okay, you could have done that. All right? But when you look at the extendedness, 9 bars up, big volume spike, wide range ending bar, wide range ending volume, double top resistance, that peekaboo is beautiful. It's brilliant. Okay? Take the trade. Take the trade. And more than likely, this stock's a second day hold. I was going to use a little bit of a stronger word, but yes, along those lines. But anyway, which nowadays could be a guy, I suppose. Oh, just let's move on. Anyway, this is looking like a second day hold. Possibly, right? Down to 111. Okay? So these are the types of things you need to be doing. Line everything up. Once it's lined up, meet your checklist, you're done. You just take it. You be robotic about it. I understand it takes a level of confidence that not everyone has yet. The yet part's important. But if you keep putting in the work and you keep practicing, that confidence will slowly get better and get better and get better to where you're going to take the wide open shot when somebody presents it with you without even questioning it. It doesn't matter, okay? It doesn't matter if the game's on the line or not. Kobe's taking the shot. He's like, I want the ball. Larry Bird's, I want the ball. Michael Jordan, I want the ball. In fact, I'd be pissed if you give it to somebody else. That's how confident I am in my ability. Right? That's where you need to get to. That level of confidence. You're like, look, everything's been met here. This is lining up the way it's supposed to line up. Push the button, take the trade. Right? Push the button, take the trade. Okay? So, when you take a look at this, all right, see the bottom here? Right there? What's likely to happen here? Well, we're in an uptrend. We put in a higher high. Now, is this retracement a little deeper than I wanted? Yes, it is. Am I expecting a new high here? Right? Am I expecting a new high here? No. But I don't need a new high. That's the beauty of it. I don't need a new high to make this a successful trade. I get that the stock is slowing down its momentum. I get it. I don't have to take this on the higher time frame. I can drill down to the lower time frame and take this little move out of it, right? This little bottoming tail right here, that's your sign. Hey, man, try to be the tail, right? Anmol talked about that in the options course, like a be the tail play. Move back up and you might be out on that 50% retracement. In this case, it retested and actually did go much higher. But I might not stick around for that. I'm looking at this wide range bar right into support, and then I see this little bottoming. So I'm like, wow, the stock's in an uptrend. It's strong. It's buyers stepped up before. They're probably going to step up again. Now, again, I'm not marrying the stock. I'm not expecting a new high. I'm just trying to find a bounce out of it. Drill down to a lower time frame, get your bounce, move on, walk away. Know the expectation. But in order to do that, guess what you need? The proper mindset, the proper routine, right? the proper bias, the proper expectation. You need to go through this list to the point where you can recite it in your sleep. It's like the only best analogy I can give you on this is it's like when you go to the damn post office and you're sitting there, you're like, look, you don't have to do the spiel. Is there anything liquid, fragile, perishable, and possibly dangerous? Blah, 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 blah. We get it. You want to get to the point where those people literally in their dreams, they say that shit. Because it's like 300 times a day they have to recite that spiel. Right? That's the way your trading needs to get. To the point where you're literally like in a fight with your spouse and you're reciting, is there anything liquid, fragile, perishable in this? That's the way your trading is. You're so connected, so in tune, so unconsciously competent. You just do it. You guys look at Unwall every day and you're in awe. How do you do it? I don't know. I've just been doing it forever. That's why. I do the same thing every day, over and 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 over again. It's unconsciously competent, right? Unconsciously competent. Oh, that wasn't even close to edgy. Pfft, I'd be canceled in a nanosecond if I actually spoke my mind at times around here. That's me showing massive levels of restraint. Anyway, your job, guys, is to work through this. Okay? Work through this. It takes time. It takes effort. It takes discipline. It takes being deliberate every single day. You want truth? Most of you won't put in that kind of time and effort. Just being honest about it. You have to want it more than I want it for you. I'm going to repeat that one more time. You have to want this more than anyone else in the world wants it for you. Because if you don't want it bad enough, you won't be successful. It's like that saying, you have to love yourself before someone else can love you, right? Love yourself or no one else can. That's the quote, right? Love yourself or no one else can. Put in the time and the effort and the work because no one else can. Talk, it's so cheap. Everyone likes to talk. Everyone loves to talk. They love to blabber about this and blabber about that and how they're going to be this and how they're going to do that. Remember? One day or day one. That's what I'm going to leave you with. One day or day one. You get to choose every day. Get to a level of unconscious competence, and trading will not only be fun and profitable, it'll be, dare I say, easy. I don't want to use that word because it's never easy, but it'll feel at times like this is easy. You're going to come in expecting to make money, not hoping to make money. And it's trust me, it's a much different mindset. There are people, athletes, for example, that literally defer when the game's on the line. Why? They don't want that kind of pressure. You know, it's like that line at the end of Ferris Bueller's Day Off. I'll take the blame for this, right? I'll take the blame for this. Oh, you don't want that kind of pressure. Watch the end of Ferris Bueller's Day Off when he kicks the car off the edge, right? You need to embrace it. It's the only way you're going to overcome it. Embrace it. All right? So, one day or day one. I'm Jared Wesley of Live Traders. We'll get back at it again next week.